This is the FFR Trading Market Minute, and this again is a daily candlestick chart of the SPY, the ETF for the S&P 500 that we track week to week here. And we had our Fed announcement yesterday. You can see we had a big explosive candle that took us to a new all-time high in the SPY. We opened up today, this is Thursday, with an outside gap up. The tendency is the market will continue to trend higher there, but that will leave this open gap below the market as long as the S&P doesn't fill that gap today. And there'll be an 80% probability that it'll fill that gap here. You got another small gap here, support here, and then this big open gap below here. So these will be the targets to the downside. We're not quite overbought here on the oscillator, so we could have more upside here before we start to see any pullback. What I really wanted to show you today, though, is if we look at the VIX. So let's start with the daily chart of the VIX. And notice, remember we had this trend line support, and this was the last time I pointed that out, and I said this is probably an area where the VIX comes down to this trend line support and begins to rally, and we see some corrective action in the SPY, which is exactly what we got there. But notice what's happened since. We've now broken that trend line, right, to the downside. Now we are oversold here on the RSI. Okay, but this is the daily chart. Let me take you to the monthly chart, right? And this is going to be a lot more significant because we've looked at this in the past, right? Where we had on the monthly chart, here's our VIX. This goes back to 2010. This is basically March of 2010 here. We started to make these series of lower lows in the VIX. And that meant the market was moving higher. And then that trend ended, and we started making a series of higher, and this starts back in November of 2017. We started making higher lows in the VIX during this entire period up until this goes into February of 2023. And there we saw some pullbacks in the S&P. We had our crash. Actually had a couple of crashes there of 30% during that period. But look what's happened now. Now the VIX once again has broken this uptrend line here, and we're starting to see lower lows in the VIX now, similar to what we had back here. Right? What does that mean? That means I think the VIX eventually now is going to work its way down to its all-time lows, right? It's historic lows. If we go back here, you can see back in December of 93, back here, January of 2007, right? And here, this was November around 2017. So I think, and what does that mean? Well, that means that the S&P will continue to work its way higher, not that we won't have corrections and pullbacks, but overall, at least until we get to this support in the VIX, which is going to be around that 950, 960 area, then, right, we'll look at potential larger corrections, as that has been the historic low for the VIX before the VIX has rallied strongly. And those rallies obviously are inversely correlated with the S&P, which means the S&P will be moving in the opposite direction, in the downward direction in this case. All right, so something important, a shift that has happened here to keep an eye on. But for the moment, we can see VIX making lower lows here, markets making higher highs. Not a ton of economic data set for next week. The biggies will be the gross domestic product, 8:30 on Thursday, and Friday's core PCE. Hope that helps. Have a great rest of your trading week. We'll see you back next week in the FFR Trading Market Minute.